Hello again and welcome back to another session of commerce class with me Suman Rathore. Students, we have already discussed what is bank reconciliation statement and how it is prepared. So today I am taking a practical problem to help you understand the concept better. So I am taking this question from Arya Publications Goel and Goel, question number 21, and you can find the question in description box also. So let's start our today's session. Okay, so it says that on 31st March 2018, passbook showed a balance of rupees 25,000. Prepare a bank reconciliation statement from the following particulars. So now here nothing is mentioned as to whether this balance of 25,000 is a debit balance or credit balance. So it will be treated as credit balance. And this credit balance of 25,000 will be taken as the base amount. Okay, so we'll write it like credit balance as per passbook, and the amount will go here in the plus items columns, rupees 25,000. Okay, so the first statement says checks of rupees 20,000 were deposited in bank on 27th March 2018. Out of which checks of rupees 5,000 were cleared on 1st April 2018. Rest are not cleared. So here, as this 5,000 was cleared on 1st April, that is the date after the date of preparation of bank reconciliation statement. So this whole amount of 20,000 will be considered as not cleared. Now we will record this transaction as checks deposited but not cleared, and the amount will go here in the plus items column. Now this amount is added because from firm's point of view, this amount is deposited in bank, due to which the bank balance of bank column in cash book must have increased. But as it is not cleared yet, so bank passbook is still showing lesser amount. So this amount is added to make the balance of passbook at par with the balance of cash book. Now the next statement says on 28th March 2018, checks were issued amounting to rupees 15,000, out of which checks of rupees 3,000 were presented in March, rupees 4,000 on 2nd April, and rest were not presented. Now see, here checks amounting to rupees 15,000 were issued. But out of these 15,000, only 3,000 were presented for payment until 31st March. Okay. So this balance amount of rupees 12,000 will be considered as checks not presented for payment. Okay. So now you must be thinking, what about that check of rupees 4,000? So as that 4,000 was presented in April, after the date of preparation of reconciliation statement, so that amount of rupees 4,000 will also be included in checks not presented till that date. Okay, so we'll make it like checks issued but not presented for payment. Okay. And it's like 15,000 minus 3,000. So the amount will go here in the minus column because issue of check is recorded in cash book. So cash book must be showing lesser amount. So to bring the balance of passbook equal to the cash book, it is deducted. Okay. Now let's see the next transaction. Checks of rupees 10,000 were deposited in bank on 28th March 2018, out of which checks of 4,000 were cleared on 2nd April and rest are dishonoured. So here we will have to break the statement into as checks deposited but not cleared, and the amount will go here in the plus items column, and checks, don't worry, I'll give you the full explanation of this. Let me just finish this. Return dishonoured 6,000. Right? Now see, Total amount of checks deposited but not cleared was rupees 10,000. Okay. Now out of this 10,000, 4,000 were cleared on 2nd April, which is after the date of preparation of bank reconciliation statement. So this 4,000 will also be considered as check deposited but not cleared, right? And now the second amount of rupees 6,000 as check of 6,000 is dishonored by the bank. So no entry of dishonor of check was made in cash book, but the entry of depositing the check must have been made. So to bring the balance of passbook equal to the balance of cash book, this will be added. Okay. Now next is interest on investment collected by bank does not appear in the cash book, rupees 800. Now this amount which is already added in the passbook but not in the cash book. So passbook balance must have increased by this amount. So to bring the balance of passbook equal to the balance of cash book, this amount will be recorded here in the minus items column and it will be deducted. So we'll make the entry as interest on investment not recorded in cash book. Amount is rupees 800 in this minus items column. Now next statement says a bills receivable of rupees 9,000 previously discounted from bank was dishonored on 30th March 2018. But no intimation was received from the bank till 31st March. So this amount or this bill returned dishonored will be recorded here in the plus item column. Now this amount of 9,000 is added as no intimation of dishonor of check was received from the bank till 31st March. So cash book must be showing a higher balance. So to bring the balance of passbook at par with the cash book, this 9,000 is added to the balance of passbook. Okay. And the last statement says bank has debited rupees 1,500 and credited rupees 1,200 in our account. So bank debited rupees 1,500 will be added here in the plus items column and bank credited rupees 1,200 will be recorded here in the minus items column. Okay. So now as we are done with all the statements, so let's just take the total now. Total of this side comes to 65,500. I'm doing the rough work here, but you please don't write it like this. And the total of this side is 14,000. So the difference of 51,500 will be the debit balance as per cash book. Okay. So this is how we prepare bank reconciliation statement. That's all for today. Thanks for staying in tune and don't forget to like and subscribe my channel. Thank you and goodbye for now.